All right, let's jump right in. India's goods and services tax, you know it as GST, has just gotten a massive overhaul. And look, this isn't some boring economic policy change that you can just ignore. No, these changes are going to directly hit the price of pretty much everything, from your morning roadie all the way to that new car you've been dreaming about. So the big question is, what does this mean for your wallet? Let's break it all down.
So the government has just pushed through this huge set of GST reforms, and they're effective like right now. The official line is that this is all about making things simpler. But for you and me, the immediate result is that prices are shifting all over the place. Which of course brings us to the most important question of all.
How exactly are these new GST rates going to impact your monthly budget? I mean, are you going to be saving some cash here? Or are certain big purchases going to need a little more planning? Stick with me, because by the end of this, you'll know exactly where you stand.
So what they're calling this is the next generation GST reforms. And the timing? Oh, it's definitely strategic. These new rates kicked in on September 22nd, which, you'll notice, is right at the start of the Navratri festival. Yeah, that's no coincidence. They've launched this during one of the biggest shopping seasons of the entire year. Okay, so what's the big idea behind all this change? Well, it really boils down to one word: simplicity. If you remember, the old GST system had all these different tax slabs. It was kind of confusing, right? The whole goal of this new structure is to sweep all that away and consolidate everything into a much, much cleaner system.
So at its heart, this whole reform is about taking that really complex, multi-layered system and just simplifying it. Now, for most of the things you buy, they're going to fall into one of two main tax rates, but the complete system is actually broken down into 4 clear tiers. Let's walk through each one.
First up, we have a brand new 0% tax bracket. And this is a huge deal because it means some really essential items are now going to be completely tax-free. That's a direct cost just gone.
Then we have the first main rate, which is set at 5%. This one is designed to cover, the huge majority of your everyday items and groceries.
From there, we jump up to the second main rate, 18%. And this slab applies to a much, much wider range of goods. We're talking electronics, appliances, and even cars. And finally, at the very top of the ladder, there's a special 40% rate. This one is reserved for what the government calls sin goods. Think tobacco. And those super high-end luxury items, private yachts and jets.
So there you go. That's the new simplified 4-tier structure. 0%, 5%, 18%, and that top 40% bracket for sin and luxury goods. But the crucial question, the one you're probably asking right now, is what exactly falls into each category? Okay, let's get into the nitty-gritty.
All right, let's start with the good news, shall we? The government is actually framing this whole thing as a GST savings festival, and it's all designed to put more money right back into your pocket. So which items are we talking about? What's about to get cheaper?
Yeah, as Prime Minister Modi said, the goal here is to boost savings for everybody, from the middle class to farmers and small business owners. The whole idea is pretty simple. If you lower taxes on common items, it makes it easier for people to afford the things they need and want.
And this is where you're going to see the first big impact on your monthly budget. That new 0% tax-free bracket, it now includes daily staples like roti and paneer. But honestly, the biggest change here might be health and life insurance premiums. They are now completely exempt from GST. That's a direct, pretty significant saving for millions of people. On top of that, essential medicines and even basic school supplies are now tax-free.
Now, moving on to that 5% slab. This is where you'll find a ton of personal care stuff. We're talking shampoo, soap, toothpaste, you name it. A lot of common kitchen and household goods, from utensils to ghee, are also getting cheaper. Oh, and check out this new rule for shoes. Any pair under 2,500 rupees now falls into this lower tax bracket. Okay, but of course, it's not all tax cuts. I mean, to create this simpler structure, the rates on some things had to go up. So, to give you the complete picture, let's take a look at what's going to cost you a little more.
And the new rule for clothing is a perfect example of how this works. Just like we saw with shoes, there's now a price cutoff. any piece of clothing that costs over 2,500 rupees is now taxed at 18%. That's a jump up from 12%. But anything below that price point, that falls into the much lower 5% slab.
That 18% bracket is also the new home for a lot of major electronics and appliances. So if you're planning on buying a new TV, an air conditioner, or maybe a dishwasher, you're going to be paying this higher rate now. And importantly, the same goes for most cars, even those really popular small petrol and diesel models. And that brings us to the top tier. That hefty 40% rate applies to things like pan masala, tobacco products, and sugary aerated drinks. It also covers high-powered motorcycles and, true luxury goods like private jets and yachts. And it's important to know this highest tax bracket isn't just for physical goods, it also applies to services like betting, casinos, and online money gaming.
All right, so we've looked at what's getting cheaper and what's getting more expensive. So what's the bottom line here? How should you be thinking about your spending and your savings from this point on?
Okay, here's a really simple way to think about your new shopping list. Number 1, you're going to save on daily essentials. We're talking groceries, insurance premiums, and all those household basics. Number 2, you'll need to plan a bit more for those big purchases, like a car or a new TV, since they're now taxed at that higher 18% rate. And number 3, you're just going to have to pay more for luxury goods, imported stuff, and those sin products. So, when you step back and look at it, the goal here is pretty clear, right? It's all about making your daily life a bit cheaper while at the same time increasing the cost of things that are considered not essential or luxury items. It's a very deliberate policy choice aimed at easing the financial pressure on the average household.
And that really leaves us with the one big question. With all the essentials getting cheaper, but those aspirational buys, like cars and bigger TVs, getting more expensive, will this new tax structure actually boost savings and spending for the middle class in the long run? Well, that's the billion rupee question, isn't it? And it's something we're all going to be watching very closely.